Welcome to the Alpha Wolf Impact Club. I'm Tim Weintraut, and this is where we shine a light on small companies with big ideas. Our mission here is crystal clear. We want to identify, support, and champion game changers. Those companies that are tackling massive challenges, revolutionizing industries, saving lives, or making us more efficient. For example, today we have CEO Eyal Cohen from BOS. BOS is a supply chain tech integrator that combines hardware, software, and services so companies see inventory, move inventory, and get the right parts when they need them. It serves customers across sectors like aerospace, defense, industrial, and retail, where accuracy and reliability matter a lot. Three core services are intelligent robotics, there's RFID, and Bosch is essentially selling fewer stockouts, fewer missed picks, faster cycle counts, and real-time inventory truth. This is a impact company, and I'm going to let Eyal tell you more about that in just a moment. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Everybody, Tim from Alpha Wolf Capital coming at you with a brand new company that has had the unfortunate pleasure of listening to me ramble on for the last, 15, 20 minutes. But this is an interesting story. I think this is a critical story for infrastructure. I think that what they do, and I'm going to let the CEO Eyal Cohen share that with you momentarily. But the company is better. Is it Better Online Solutions? Is that what it is?
Yeah, the long name, Better Online Solution. Yeah.
Yeah, Better Online Solutions.
Historic name, yeah. Very
Yeah.
historic.
And you guys have well, first of all, thank you for coming in to do this.
Thank you for inviting me. Thank you.
And what I would like to do is I'd like to have you just kind of give us a little bit of background on you and how you got here, right? And then your vision for the company and where you want to take it.
Oh,
Okay?
great. Okay, great. So thank you for having me. I'm in the company I started 20 years ago in the financial unit of the company. When the company was at the business of the voice over IP, it was an R&D company that developed the voice over IP, one of the pioneers, with 150 engineers, software engineer, electrical engineers. And in year 2005, the business was sold to an American company that took it from there with the marketing and sell channels. And with the consideration, the board of the company decided to shift to businesses that generate cash, ongoing cash, as opposed to before that it was R&D company every year generated the losses due to investment in R&D. And so in 2005, it started to do some acquisition. Started with the supply chain division, and then after the RFID division, and then after the robotic division, and thereafter acquisition in each division inside internally. And one of the present that left from the historic period is like today. We started with the 25 or 30 million dollar tax losses carry forward. Today we have. I'm lucky that we left with just like 16 million, and so we are in the business of not development but integration, meaning to take the best technology available for our client and to implement it in the field of technologies for industrial and logistic processes in order to improve the efficiency of the operation through the supply chain. And we are doing it through three layers of a solution. And maybe because we are building things, we are not just coding software. So maybe the best way is to share some videos that I will speak through. We can have also a session through it, but it will illustrate our the field where we are working in. Let me just do some screen share. Yeah. Yeah. So we are doing it through a three business unit that reflect three layers of solution. The deepest layer is the robotic division that automate inventory processes by replacing labor with robotic solution, usually customized robotic solution. The RFID division covering inventory tracking and end-of-the-line automation, particularly in the packing area, packing machine, off the shelf, and the supply chain division, in a little bit different approach, integrates franchise electromechanical components to our client's product. So we are seeing the supply chain division, which in that division, our engineering team works hand in hand with our customers' R&D department to ensure seamless integration of our franchise component into their innovative product, as you can see in the video. And by that, once this product run into production, it generates for us long-term recurrent revenues. So the primary growth driver here is a number of components we successfully embed into our client's product. And that's why expanding our integration capabilities is central to our strategy. And because of that, over the last 2 years, we have more than doubled our engineering team, sales engineering team, and tripled the number of manufacturers we represent, and by that, strengthen our market position. So the result is that we are serving the major defense manufacturer in Israel, Israeli aerospace industry, Elbit System, and Rafael. And there are hundreds of subcontractors around the world, and mainly in the India, USA, and Europe. And this network of subcontractors serves as our launchpad for a global expansion without the need for costly overseas sales offices. In the RFID division, the second layer of solution, we deliver end-to-end supply chain automation technologies for logistics centers covering inventory tracking and tagging, automated sorting and automated packing solution, meaning end-of-line solution in the logistics center or in the factory. So we create real-time inventory visibility by connecting warehouse flow operation directly to the client ERP or WMS or MES systems. And our integrated platform combined from software, but also from ruggedized industrial hardware with our proprietary software. The ruggedized hardware includes handheld computer, forklift-mounted tablets, scanners, RFID readers, and thermal printer from top-tier manufacturers like Zebra and Honeywell. Beyond tracking, we deploy turnkey automation systems, including automatic sorter, carton packing machine, robotic palletizing, and pallet wrapping, enabling fully integrated order fulfillment workflows. And for new warehouses project, we design also the complete wireless infrastructure, position us as a major provider for connectivity and automation from the ground up. So the business model of this division is first recurrent revenues from annual service contract for a lot of hardware here and the software as well. ongoing sales of consumables like barcode label, RFID tags, and spare parts, and ribbons for the thermal printer and all this stuff. And expansion revenues in case of existing client expand to additional facilities. This is more project revenues. So we are proud to serve, as you saw, IKEA, Supersal, and Teva, the biggest chains in Israel. The robotic division design and deploy custom-made automation solutions that streamline labor-intensive industrial and logistic processes through robotics and custom-made automated machinery. So the approach is that our engineers team works. Yes.
I'm just looking at that's amazing.
Yeah, it's from we have a staff that we are working with a client that facing labor shortage and high cost manual processes. We evaluate their production line, determine which tasks can be fully or partly automated, and deliver a comprehensive proposal, including concept design and cost breakdown and ROI calculation and ROI projection. And our robotic cells consist of several integrated components, robotic arms, or we purchase it, or we develop in-house in case it's not available, it's not exist. Custom designed grippers, proprietary peripheral automation machine tailored to each client unique needs. Just a moment.
Wow.
Okay. In the last 2 years, we have strategically transitioned our business focus to the defense industry. Currently, 90% of our backlog is concentrated in this sector. The defense manufacturer sectors remain heavily reliant on manual labor while facing increasing pressure for faster production cycle and higher quality standards. This creates significant tailwind for automation adoption. As you can see, our major client is again Elbit System in this division as well, one of the Israeli largest defense contractor. And we have successfully developed and installed robotic production line in their Israeli facilities. And in Q1, we will install the first defense system in Europe. Our board, our team, BOSC is led by a skilled executive of 8 and 4 board members. One board member previously served as the head of procurement for the Israeli Ministry of Defense. Our team includes 80 professionals, with 30% being engineers and technicians. Competitive advantage, BOSC provides comprehensive offering for industrial and logistic processes, and each expansion step of our offering strengthens our competitive advantage. The supply chain division advantage is that it's specialized in electromechanical components, authorized representation of global industry leaders like Amphenol and Fishers in the world of connectors, strategic partnership with Indian assembly subcontractors, and direct access to strategic clients. There is high synergy between our robotic and RFID division, which create powerful competitive advantage. Together, they provide comprehensive suite of automation solutions to improve productivity in industrial and logistic processes across 3 integrated phases. Phase A, the production automation through robotic cells. Phase B, inventory tagging and tracking via barcode or RFID, connecting production flow or warehouse to the ERP system. And Phase C, packing automation through robotic cells. Let's jump to the financials. We delivered strong growth in the first 9 months of this year. Revenue grew year over year by 28% to $38 million. Continuing our record performance this year. We strategically expanding overseas by partnering with international subcontractors of our Israeli defense clients. This market are relatively untapped by BOS and represent potential growth. We see India as a major target market because it is a global hub for wire and connector assembly, where our supply chain division has a competitive advantage. Through this approach, our international revenues grew by 24% year over year, demonstrating the growth potential in international markets. Our net income grew year over year by 54% to $2.8 million, while our revenue grew by 28%, showing our ability to convert revenue into bottom line results. Plus, profit leverages as we scale the operating base of the business. We have demonstrated consistent profitability with steady net income growth, achieving a compound annual growth rate of 57% from year 21 to year 25. Our financial foundation has never been stronger. Cash and equivalents grew to $7.3 million, up from $3.6 million at the year end. Our shareholders' equity amount to $25 million, which accounts for 66% of our balance sheet. We have positive working capital of $18 million and $1.1 million in long-term bank loans used to finance real estate we are using for our own operation. This strong balance sheet gives us the flexibility to capitalize on opportunities as they arise, supporting organic growth and strategic acquisitions. The consistent growth in revenues and net income, strong financial position, and $24 million backlog covering approximately 50% of our annual revenues underscore the strength of our defense-focused strategy.
Did you say 30? Is it $34 million backlog?
24.
24, okay.
Yeah. So this result underscores the strength of our defense-focused strategy and years of deliberate investment in product diversification and operational excellence. Our financial outlook for year 25 has been upgraded for the third time this year. We now expect to meet the high end of our previous guidance range of 45 to 48. So we are targeting the 48 million in revenues and $2.6 to $3.1 million in net income. There are several tailwinds that have accelerated our growth momentum, and we believe will support our long-term organic growth. First, the global increase in defense budget, which seems like a long-term trend that will positively impact our growth in the coming years. Second, the replenishment and expansion of Israeli Defense Forces inventory. And third, expanding our presence in India assembly subcontractor market. On top of it, the potential stabilization and improving geopolitical condition in the Middle East is pivotal tailwind for the growth of the Israeli civil market, commercial market, and will positively impact the growth of our RFID division. These drivers support our continued organic growth. We continue to seek M&A opportunities to support our long-term growth. In this regard, we are targeting companies that meet 4 criteria: strategic fit, company that expand our offering to core different segment client, geographic focus Israeli-based company, financial strength, solid history of profitability and consistent growth, strong and experienced management teams. We are targeting acquisition value up to $10 million. And the financing strategies, given the profitability of the target company, 50% of the investment will be financed through long-term bank loans, and the rest, given our strong balance sheet, will be financed by our internal resources. So let's conclude with the valuation. Our valuation offers attractive upside compared to Russell 2000 index multiples. PE of Russell is 20 versus 9 for BOS, And PB, price to book value, Russell is 2.2 and BOSS is half of it, 1.2. So this is in a very short way the description of our business, and
That was excellent.
thank you.
That was excellent. I mean, you guys do some amazing work, right?
Very, very hard work. We are in the field, we are in the factory,
Yeah.
we are building things.
I mean, but
Yeah,
it looks like a well-oiled machine though, right?
yeah,
I mean,
absolutely.
everything is just flowing. I mean, that was so cool to me, right? I
Yeah,
mean, that might
it,
scare the shit out of some people because it's like, oh my God, there goes my warehouse job. But look, you shouldn't fear it. You should embrace it, right? I mean, we should be looking at this as that's how it makes you more efficient. That's how it makes you safer. I would imagine your environments are safer, right? Uh,
yeah,
I mean, it's more efficient, it's safer, and look, you're not going to stop this. This is how things are going to get done. This is how things are going to be done, right? So the sooner you embrace things like this, the better off you're going to be, right?
absolutely. There is a it's there is a lot of satisfaction once you see we are in the chain, the robotic division. It's in a very tough chain in the supply chain. Customers approach us when there is no off-the-shelf solution, and we have to learn the challenge and to decide whether it's applicable to do it through robotics or not. And if yes, we build it and we design a concept and we budget the concept, then we calculate the ROI, and then we start. If we get the order, we start to do the work. It can take like a half year until
Wow.
it's working on the customer side. But when it works for many years, And then along the way, we need to do some upgrade to new product of the client that you doesn't have to wave the robot once we have new product or
Right.
new process in the logistics center or in the factory. You can do certain adjustments, sometimes significant, sometimes no, and continue to work. And we are supporting our client all along the way.
And you've got some big names there too, right? Elbit is a very big name.
Yeah, Elbit became a very big name in the recent 2 years because we are in the section of munitions for tanks mainly. And it's all the process of production is 100% manual. And because their backlog jumps seriously, more than 100 times because of the situation in Europe and Israel, and they had to increase capacity, they decided that they will do everything by robotics systems. So we developed several production line for Elbit for new factories in Israel, a new factory in Europe that, one line replaced 11 employees and it worked 24/7, each line. And there are no issue to pay to employees. They don't have employees.
Yeah, this is I would say you're on the front end of of cutting edge. I mean, if you look back to what happened with COVID, right? When we had the supply chain issues. I mean, that was like historic in nature, right? I think with your system, maybe it wouldn't have been as bad. Would you agree with that?
Absolutely. I can tell you a story that manufacturers in the north of Israel told me that during the COVID, they work in 50%, 40% capacity. And the 40% were the robotic lines.
Right.
Yeah.
Yep. I mean I can see it. I can see it. And I look at all these different types of vendors, like the guys that make the optical lenses for robotics and cameras and stuff like that. All of that stuff doesn't sound very sexy, but when you start thinking about how things are going, where not where we're at today, but where we're going tomorrow, there's going to be a lot of robotics everywhere. I mean, you might as well just start getting used to the idea now because you're not going to stop this from happening, right? Because it's just a natural progression. It's going to make us more efficient. It's going to make us smarter. It's going to make us faster. It's going to make us safer. And there's nothing wrong with that, right? We
Yeah,
have to look at things as it's an opportunity to improve ourselves. And improving ourselves is, yeah, sometimes scary, but it's not going to replace us. It's going to help. It's going to enhance us. That's what it's going to do, right? And
ab-
it's going to enable us to do a lot of amazing things if we just get out of our own way, right? I mean,
yeah,
that's the thing. Quit. I think that we could actually get to a utopia state at some point where maybe everybody doesn't have to work. Maybe everybody, because the robots are doing all the work, but we're all living a very good life. Wouldn't that be something, right? If that could be the case. I mean, you got a stock right now that's $4.50. If every factory in the world is using your system or your supply chain, I would imagine your stock's not going to stay at $4.50. I think it would probably go to a much higher number.
yeah.
Anybody could buy this stock right now, right? I mean, it's cheaper than a McDonald's Happy Meal. I mean, and the McDonald's Happy Meal is only going to make you feel good for about a minute, and then you're going to wind up pooping it out. So, I mean, that's not worth anything. Buy the stock, and who knows where this thing goes in the next 5, 10 years, right? But I can almost assure you, and I'm not making any guarantees for anybody out there that's watching this right now. I'm not making any guarantees, but what I'm saying is this is a company that is at the forefront of an industry that is going to be needed for a very long, long time, right? And you're
Absolutely.
building systems that are unique to industries. You're customizing, and you just said it takes half a year, but once you're up and running, I can imagine it'd be like, holy shit, why we didn't do this like 10 years ago? Well, we couldn't have because we didn't have the technology then. We've got it now. And it's improving every day, right?
Absolutely. Absolutely. It's improving every day. Let me give you an example. And maybe you saw in the video that there is a robot that does palletizing in parallel for for two conveyors. Before 1 year, it took us like 1 week to program it. Today, with the AI that is built in the robot, we are doing it in 20 minutes. So
And
our mission is to bring the best technology, not to develop the technology, to bring the best technology that other company invested trillions of dollars to develop it and bring it to our customer in the most efficient way so that it will work perfectly. So
right.
this is our mission.
And I love the mission, right? I mean, and I think the more people that learn about you, I think the reason why the stock is where it is because people just don't know who you are, right?
Absolutely. It's a matter of exposure. We are a small, relatively small company, not an American company, foreigner company, and not a startup company that develop a patent after investment of $100 million. And this is the reason why in the last year, in the recent year, we together with our IR firm, we did we invested a lot of time to expose the story. And yesterday it was the fifth summit that I participated in the last year, as compared to nothing before.
Right.
And you absolutely see the effect in the trading volume. It jumps significantly to 130,000 stocks a day, which is about $600,000 a day. very good progress, and I'm sure that the price adjustment will follow.
Yeah, no, this is a great story. People just don't hear it. You know, even the symbol BOSC, when I think of BOSC, I think of Bosch, the other Bosch that's in Germany, right? That's what
Yeah.
I think of.
Yeah. Continue to believe, yeah.
So, I mean, I can see how people would have a difficult time maybe finding you, right? But I think that video that you just went through was fantastic. So let me ask you, let's talk about the balance sheet. You have very little debt. Yeah, I mean, you already saw that, right? How many shares outstanding, fully diluted?
The outstanding is 7 million, and we still have outside like 150,000 words.
Okay. So yeah, and that's actually let's so we're going to talk about that real quick here. So you and I met a couple of weeks ago, a few weeks ago, and we kind of talked about your chart, and I said, you know, if you can get through $5,
Yeah.
this could be a it's been an area of resistance for you for quite a
I,
while, but you
I
built a
remember
nice
this one.
base. I
Yeah.
swear to you, we had our meeting. I said, "Boy, you're looking really tight right here. You're coiling up," and then boom, you broke right through. You went from 5 to almost $7, right? In a few
Yeah.
days, and then you pulled back. Now, I didn't have the opportunity to find out what the deal was until today, and it makes 100% sense to me. You had some warrants, which were an overhang. Those warrants have now been exercised, and that pulled the stock price back. So that was the overhang. You just got done telling me that you've got a very minimal amount of warrants left, right? Not going to be very impactful. You've got 7 million shares outstanding.
Correct.
Holy shish kebab! I mean, that's not a lot of shares, man. And if you get some good news, some really good news, a couple of good size contracts or whatever, this thing could rip, right? So here we are. We're in tax loss selling season. Anybody that doesn't really understand the company or understand the vision of where you're going might make a bad choice and say, "Oh man, look, it's tanking. Look at how badly it just fell in the last few couple of weeks." It has nothing to do with what's going on with the company. The company is executing very high level, right?
Yeah,
This
I
is a
agree.
this is a growth story. You just said that you are looking at India, and that makes a lot of sense because there's a lot of manufacturing going on over there, right?
Assembly.
So, uh, look, how do you compete with China? I'll tell you how you compete with China. You get robotics. You manufacture with robotics. That's how you compete.
I tell you, we are going to India with the supply chain division. India is a major hub, global hub for assembly, and because it's assembly related to the defense and to the aerospace, China is not a factor. Okay, because they are not allowed to do sub-assembly in China. For example, IAI and Elbit and Rafael are not, they will not do assembly in China. None of the defense consumer that won't do it in China. So because of that, we are approaching the Indian market as a global center for the assembly, and we have a great offering for this market. We have the right component, we have the flexibility to provide them a scheduling of the component according to their long production process. The production process of assembly can take half year, and we can handle a package with financing as well. So we have the whole suit adjustable, especially for the Indian market. And we also may be considering also to change the way how we are doing business in India, maybe to get more closer, to have a wider footprint in that in India, maybe considering opening cell offices, or maybe to open a front warehouse in India in order to show the lead time. So absolutely, in year 26, we see different approach how to expand the business in India in order to support the projected growth we expect to in the Indian market.
I think you're going to have a tremendous opportunity in the United States. I mean, look, one of the things that this administration is focused on is bringing back manufacturing to the U.S. Now we can't necessarily do that with the labor here because we have union labors and all that, but it doesn't mean that we can't use robotics on assembly lines for lots of different stuff that we're trying to bring back to the United States for manufacturing, right? And that is a big push of this administration, and there are a lot of companies that are making that commitment to come to the United States and have a manufacturing facility here. And
Yeah,
I think it's a positive. It's a positive for everybody, right?
yeah,
I mean, I know the tariff thing has got everybody up in arms about, but the reality is, things have not been balanced, I don't think, for a long, long time. I mean, and we
yeah,
did this to ourselves. We shipped all our manufacturing overseas to China. And if you think about that, it really wasn't a very good thing that we did because it's not, we may not have child labor here, but they do over there in China, and everybody knows it. And they also don't pay their people very well over there in China. And they also pollute the hell out of or used to pollute. I guess they're working on that. But, there were a lot of things that they do that, yes, we could buy cheap product from them, but that's because of all those things that they do over there that we don't do here. So, it's like we were
absolutely.
writing the check for them to grow and become a powerhouse on our back while giving away all of our jobs. So you can't have cheap prices and great jobs and all that. All that stuff doesn't go hand in hand. You're making sacrifices somewhere, and now it's coming home to roost, right? Now
Yeah,
we're trying to get manufacturing back here, and I think we can do that. It's not going to be all jobs. It's going to be robotics. A lot of it is going to be robotics because it's more efficient, it's faster. There's an
yeah,
ROI, return on investment. You don't have anybody filing sexual harassment lawsuits or age discrimination lawsuits. It's because robots just work 24/7. They don't complain. They just do the job, and they do it typically better. So,
yeah, and absolutely, absolutely. We are working a lot with China, with the aspect of, in case of buying off-the-shelf automation to our client, and they have advanced systems for automation, and they implement. I think they are the leader in implementing robotic system in production line. And this is one of the secrets why they are so cheap, why they are so competitive, not just because of child labor,
right.
but because they invest in automation whenever or whatever they can do. There is an option, and they have a very good field test. Once a integration or integrator of automation build a line, it can test it in China on huge capacity of production. No, and it's
Yep.
very they have very robust systems. Okay, for example, we are buying cobots from China. Cobots, it's like industrial robot, but he can work commonly with the labor without difference. He won't harm him. He know exactly where to stop to move, and very friendly. They are world leader in that area. So America can learn a lot from them how to embrace the implementation of robotic system in production line, to push for it, not to do any calculation. It's good for the long term.
Yep. And I'm not trying to bash China. What I'm saying is that at one time we created the powerhouse that they became, right? When really what we should have been doing is putting that money back into robotics and stuff like that. Everything I see, I mean, I hear about their cars, I hear about they are
Mm.
surpassing us in their technical capabilities. And
Let,
if we
let me,
don't wake up, I mean, we provided them the opportunity to be able to do that, right? Because we sent all our manufacturing to them. We became their biggest customer. So, when you create that kind of a dynamic, this is what happens. Now, I'm it's you're right, efficiency. I've seen their drones. I mean, now they're delivering food and coffee with drones. I mean, really advanced. So, we have to catch up. I mean, we were at one time the technological leaders in the world, and we still are in some areas, but we've got a lot to learn over here, I think, and some
yeah,
catching up to do.
yeah, let me give you an example. Let me share with you. This is a robotic cell that we built. It took us like 1 year to build it. It's in the south of Israel.
Oh, this
And
was the thing I saw. This is where
yeah,
you can bake. You were making conveyor belts, right? Is that what you were making?
yeah, we are, it's not conveyor belt, it's solar boards for hot water for swimming pools. Most of the products go to California, to the swimming pool at homes in California. And the story here is this factory compete with the Chinese in a very successful way because there is no employee on that line. The employee on the left is our employee that tests the system. There is no employee in that line. Everything is running automatically. And this is the way how to win. Now we can compete with the Chinese. There are no employees online. Everything is automatically robotics.
Right. This is what got my attention.
Yeah, yeah. Here you see the line below, the machine below. It's a customized machine that we built. It's not exist in order to assembly the sheet into one big sheet. So this is a secret how uh, to be competitive.
Yes, absolutely. I mean, this
By
is
the way, this line in October 7, when the war started in Israel, the site is in the south of Israel on the border of Gaza. So there was nobody in the factory. All the employees left, ran away, but the robots continued to produce
wow.
during all the war.
No,
Yeah.
this is it. I mean, this is the future that you're looking at, and I think you guys are who do you have any major competitors out there? Who's your number one competitor out there?
Yeah, because we are integrators, they are competitors.
Okay.
Okay, and as integrator, we are a strong financial condition, so we can bid on big transactions with big clients because those systems are for millions, investment of millions of dollars, and the client need to trust you. And in case of Elbit, it's very urgent for them to do delivery, and he need to trust you. So our financial position is it's a very competitive advantage. Of course, we know how to integrate off-the-shelf machine to build customized automation, to do the programming, the electric, to provide all the suit in one place. So we have competitors. There are another two big players in Israel in the same level, but there is work for everybody.
Right. Right. It's a big world, right? I mean,
Yeah,
there's
yeah,
there's a lot of stuff that's being made. There's going to be more
yeah,
stuff being made. Um, Do you see the U.S. as an attractive market for you?
And the US can be an attractive market in the defense application that we have. During the last 2 years, we developed a unique customized machine for munition production. And we believe that if we will find the right munition manufacturer in the US, we have a very nice offer to give, and we are working to find the right connection to reach to.
Okay. Okay. So what do you see as potential catalysts over the next 6 to 12 months?
I think, as I mentioned in my growth plan, we see that the strong demand in the defense continue, and locally and in Europe as well, or globally. The potential in the Indian market, I believe that we will capitalize this opportunity in year 26. And the recovery, the rebound in the commercial market in Israel started. We see the result already in the fourth quarter, that we see a recovery in the result of the RFID division. So all those reasons, three elements, will support our growth in year 26, and we will provide outlook during the first quarter of year 26 to year 26. But as usual, our outlook are conservative, and we keep spur for upgrade during the year. So as we did this year, we provided the upgrade outlook for the third time.
Yeah. Look, I'd much rather have you be a under promise and over deliver person than a over promise and under deliver person, right?
Yeah, absolutely. Yeah, absolutely. Because our projection is based on organic growth, I think, and we are integrator. We are not developing a product that we work on it 5 years with a $40 million investment. So I think it's reasonable to give like up to 10% growth, organic growth rate as a growth target. I think this is the range.
Do you have a good position of stock in the company personally?
Not good enough. Yeah, usually I'm getting my annual bonus paid by stock, restricted stock, and by
Okay.
that I accumulate some stocks.
Okay, good. All right. What could make it what could be the hiccup? What could be the what could go wrong?
Bad acquisition.
Bad acquisition. That's
Yeah,
yep. Okay, I can
yeah,
see that. Yep.
yeah,
But I think you're pretty I would imagine you have a pretty due diligence period or process, right?
yeah, yeah, absolutely. So this is one, but still, if you are buying competitor, so the risks are low because you know how to manage the company in case of crisis. But if it's not the 100% of like your existing business, it's different. So it's a risk. You are depending on the current management of the company, and if something gets wrong and they are not acting, fast and effective, and you're still earning the business, it's a risk.
Right.
So M&A, it's a risk, but it's a potential as well. And this is the potential of our growth for the long term to reach to the $100 million, the target that we want to reach to.
That is the goal, right? You want to get to be a $100 million
Yeah,
company.
yeah, absolutely. And but we have to do it very carefully, step by step, to do acquisition, to integrate it, to see that it's working smoothly. it has experience, it has a good management, experience management, and you can go to the next time, to the next step, not to do everything in one time. What can go wrong? I think if we see the commercial market in Israel in rebound, the market is very optimistic. The stock exchange in Israel did a great move in the recent 2 months. So everybody optimistic. And I hope we are not going to another cycle of tension here in the area.
Yeah.
So this is but it will be offset with the growth in the supply chain, stronger growth in the supply chain. Okay, we are in, but we still prefer peace than war.
Right.
You know,
Right.
this is those are the things. Yeah.
Yeah. Listen, I thoroughly enjoyed this conversation. I think there are going to be a lot of people that are going to appreciate this story, and I mean that's what we're here for is to help companies that are making the world a better place, make people more aware of them. Right? There's a lot of good companies out there that are doing a lot of good, amazing things that will benefit humanity. Right? And I believe this is one of those stories. So. Uh, I think you should keep an eye on this. Now, right now, they do not have a email alert service, but uh, we're going to change that.
Yeah, it was
Right?
good tip, very good tip. I was not alert for that. Yeah, but we will improve. We will add the investor deck to the website. We will implement the alert tip. And as I mentioned before, until I think that until last year, and this year just in this year we have started to do some IR activities, and we are learning. I'm learning how to do it better and how to invest time on it. And I'm learning from you also. You gave me some important tip, and we will improve our website that will include more information, accessible information for the shareholders. So
Yeah, perfect. If that's what I love to see, right? So that's another that is another attribute that I look for in leadership, right? When you try to help them, do they accept your help? Do they take the advice, right? Some don't. Some think they know what they got all the answers, and then some do, right? I'm not trying to force anybody to do anything. It's just, look, if I'm going to be invested, these are the things that I would like to see if I'm an investor, right? I don't want to have to search for news. I'd like the news to come right to my email, right? That's pretty simple stuff. So,
yeah,
I mean, I love this story. I like the price of where the stock is. I think that you just saw a small snippet of what the stock can do. It's got a low amount of shares. It's not overly bloated. You have a very clear area of support. We're approaching that area right now. So my advice to everybody is, and I could say this, I could say this because I'm not telling anybody to buy and go all in, but I will say buy one share, right? Buy one share, and the reason I say that is because when you own it, you will pay attention. Okay? And
yeah.
everybody can own. Now, it may go to 10, and then you'll be mad that you only have one share, but at least you participated, right? I mean, at least you didn't miss the whole thing. That's the way I look at it. You start
Yeah,
small, you get to know the company, you follow them, you see what's happening, see if they're executing, and if they do what they say they're going to do, I think over time this is where the world is going, right? You are where there's an old saying in hockey, go where the puck is going to be, not where it is, right?
mm,
And you're at the place where the puck is going to be. And I think that this is a really good opportunity here at this level. How big is the TAM? Can you give me a number on the TAM?
What do you mean, Tim?
The total addressable market. How big is that number?
In the defense, in the supply chain, huge.
Trillions.
It's global. All the assembly of electronic assembly for the defense market for the aerospace, it's something huge.
Right. It's trillions of dollars. I don't even think you could probably put an accurate number on it.
Yeah,
Right. So
yeah.
this is a it may not be a sexy business, but it's a needed business. And this is a company you want to keep an eye on. When should we have you back to do a follow-up?
I think we are we have the conference call for the annual result of the year 25, so we can meet there.
After your report, what are you reporting?
The end of March.
The end of
End of March, but we can also have another session before that, after the release of our outlook for year 26. We can have a session, we can discuss it.
I'll tell you what, this is what we'll do. Anytime you feel like you have something that is worthy of, it doesn't have to be a 1 hour interview like this one, right? I do this one on the first one because I want people to get a feeling for who's leading the charge, right? And I think this is a really good way of people to get to know the person, right? So the next ones, you just come and say, hey, Tim, I've got this. I want the investors to understand what this really means. Okay.
Mm, okay,
That sound like
great.
a good plan?
Good plan. Yeah, yeah, yeah. Very
Okay,
good. Okay.
perfect. Thank you so
Thank
much
you
for
very
doing
much.
this. I appreciate it. And
Tim,
yeah.
it was great to meet you again. Will you give a prediction for today as you did last time? Last time you mentioned that it will break the $5 and happen 1 hour after. So maybe give a prediction for today as well.
Well, I'll tell you what, I think, like I said, I think this level right here is, well, I told you earlier, and I can say this because it's me, I'm going to buy today. I am buying today, right? So I look at it like this. What's my risk reward? My risk reward is if you go bankrupt, I'm going to lose $4.44. But what is the potential upside? I think you showed you're definitely not fairly valued right now in terms of compared to the rest of the field or industry, right? So I think that this is a lower risk entry point. I think you're getting a gift here because it did just spike to 7. And now the people that don't have any conviction or don't understand what they own are getting shaken out, right? So,
Yeah,
but what happened? You eliminated the warrant overhang. That's a great news,
great
right?
news. Great news.
You don't need that. You don't have any need to raise capital, do you?
No, even if I will do acquisition in the target amount that I mentioned before, the $10 million, if it's a profit, I will acquire a profitable company so I can finance 50% by loan, 50% by internal mean. At the
And
end
will
of
you use?
September, we are. Yeah.
Would you use the stock as currency?
I will try. I will try to do
I
it,
mean,
but
the reason
but
I ask that, and this is what I like to see with acquisitions, right? When you, it's because if you buy a company and you don't keep the management, they have a non-compete for so long or whatever, and then they go out and they just open up another one, and now they're your competitor. When you use the stock, your stock as a currency, typically that keeps the management team around. They're joining on, right? So maybe their skill set is what they do, the manufacturing or whatever, but they're not the greatest bookkeepers and all this other stuff. They're not the greatest marketers, right? So you let them continue doing what they do best, right? And take some of that burden off of them and get them to join in and say, look, this is what I envision for the company for the long future. We're going to build something great here. You want to be part of that, right? And I love to see the management teams come along. If it's just a cash buyout, they're taking the cash and then they're thinking, okay, what am I going to do tomorrow? Maybe I'll start up a competitor. You know what I mean?
Yeah, I agree with you. It's good point. Usually, when I'm buying a company, and I'm buying from the owner of the company, so that usually typically is not managing the company. So I pay in cash, but to keep the management, I take some portion of the consideration and allocate it to the management. And it's a good idea to pay to the management in stocks and not in cash, even though I have the cash.
Right.
But to pay in stocks, it's a good idea.
Yeah. I mean, it's just a way to get them to buy in, right? I mean, if they're going to continue to do what they do great and you're going to make their job easier, right? And you want to grow this thing to be a mammoth corporation, then they're in. They get buy-in, right? And
Yeah,
they're contributing to the success. Those are the kinds of things I love to see.
yeah,
So, all right, man.
good.
I'm glad we did this. I'm going to stop talking. I'll get this out to you. Well, actually, hold on one second. I'm going to shut this off. Thank you for tuning in to another CEO interview here at Alpha Wolf Capital. I hope you enjoyed today's interview. Today we had Eyal Cohen from BOS. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, please make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.